Hey, what's up, my friend? So, in today's video, you'll discover why 95% of traders lose and how do you be the top 5% of traders. So, this video, I'm not just going to tell you, what are some of the mistakes traders do, blah, blah, blah. No, I'm going to also give you actionable trading tips and things that you can do, right, to get results, right, for your own trading. Sounds good? Then let's get started. Number one, you don't understand the law of large number, and that's why you get fooled by it. So now some of you might be thinking, Rayner, what's the law of large number, man? So the law of large number states that in the short run, your trading results are random, and in the long run, it'll be aligned towards the system's expectancy. I know you're confused, right? Don't worry. Let me give you an example. So let's say you have a trading system with a 50% win rate. So you can see over here, okay, many traders would think that, okay, a 50% win rate, so I can expect to have a win, loss, win, loss, win, loss, win, loss, win, loss, and all the way, right? And the answer is no. That's not true. You shouldn't expect this, actually. It doesn't happen in the real world of trading. In the real world of trading, if you have a system with a 50% win rate, it looks more like lose, win, win, lose, 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 win, lose, and win, 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 lose, win. So you can see that in the real world of trading, you have losing streaks, right? Losing streaks over here. You have winning streaks. And you pretty much realize that from one trade to the next, right? You do not know whether it's going to be a loser or a winner. So this is what I mean by, in the short run, your trading results are random. Because if you look at it, in the short run, you have no idea whether the next trade is going to be a loser or a winner or a loser or winner. You just have no idea. But in the big picture, right, when you have a large enough sample size, right, that is where your system is aligned, right, towards its expectancy. Because you can see that over here, out of a simulated 16 outcomes, right, you can see that you have 8 winners. If you calculate 1, 2, 3, 4, 5, 6, 7, 8 winners and 8 losers, and pretty much gives you a 50% win rate, right? But a 50% win rate only occurs after a large sample size of trades. To be honest, this 16 trades is quite a small sample size, but you don't expect me to draw 100 series of LW here. So, but the concept I'm trying to bring across is that your win rate will only be obvious, right, after you've taken a series of trade, a sample size of trade, a large sample size of trades. In the short run, right, your results are pretty much random. It can be a loser or a winner. So, because of this, right, the law of large number, many traders, they don't understand this concept, and when they encounter a series of losing trades, a losing streak, they would abandon the trading strategy and start to look for the next best thing. Look for a next trading system that has a higher win rate, that is more profitable, that makes more money, that loses less. It doesn't exist, my friend. Any trading system that you come across, there will be losing trades. It's a matter of time before you encounter it. So be prepared for this. Embrace it, right? And don't get fooled by the law of large number. And one way to go about doing it is to execute a minimum of 100 trades. So whatever trading system that you're trading or testing or whatever, right? Don't abandon the system just because a losing streak comes. It will definitely come now that you know. So before you abandon it, right, execute the trades, execute the system a minimum of 100 times. Only then, right, you can evaluate the system objectively and know whether it works or not. Make sense? Okay, so by the way, right, if this is the first time that you're watching this video, hit the thumbs up button and subscribe to my YouTube channel. The link is all below. Click the button, subscribe, and this way, whenever I publish a new video, you can hear me cough, right, and share with you new trading techniques, strategies, and much more. Right, so do it right now. So next one, you don't have an edge in the markets. Right, so you probably hear the term an edge often in the trading world, and what it means is that an edge, right, is something that you do repeatedly over time that yields a positive expectancy. Okay, let me give you an example. Let's say there is a dice in front of you. A dice has a number 1, 2, 3, 4, 5, 6. Every time it comes up 1, 3, and 5, you lose $1. Every time it comes up 2, 4, 6, you make $1. Clearly, you know that if you roll that dice 10 times, 100 times, 1,000 times, you're not going to make money because you don't have an edge when you roll the dice. So that's a normal dice, normal rules of the game of that dice roll. But now let's say you have God's dice. This dice, or rather the rule of this game now is different, right? Every time it rolls 1, 3, and 5, you make $10. And every time it comes up 2, 4, 6, you lose $1. So this God's dice in the long run, will you make money? I'm pretty darn sure that in the long run, you'll be really, really rich, right? If you have this God's dice, right, to play with. Because you clearly have an edge, right, in this roll of the dice. And this is the same for casino. When you go down to the casino, you realize that in the long run, people lose money is because the house always have an edge over the players. It doesn't matter whether the player have adequate capital, they have proper risk management, or the right trading psychology. It doesn't matter because the edge trumps everything else. The player can come in with the best psychology, the best risk management, the best everything, and they'll still lose money to the casino. Right? How they'll lose is a death by 1,000 cut until they dead. Okay, so this is why you must have an edge. And it's the same for trading. You must have an edge in trading. So now the question clearly is, Rayner, that's easy for you to say. So how do I find an edge in trading? There are many ways to do so, right? But to just get straight to the point, the fastest way to get an edge is to learn from traders who have come before you. This means, right, you can get ideas from books, right, that share with you backtested trading results. For example, Following the Trend by Andreas Kleno, Unholy Grails by Nick Ratch, right, Mean Reversion Trading Systems by Howard B. Bendy. So these are books that already have trading systems, complete trading systems from entries to exits, risk management and everything, and even provide you with the backtested results. Now, it doesn't mean that you just take the system and just trade it straight away. No. What you do is that you use that as a template, as a foundation for your own trading. More importantly, you want to ask yourself why this system makes money. What is the why behind it? Because once you can understand the why, once you understand the concept, the principle behind it, then you can make modifications. You can make tweaks to the system, right, to suit your needs. Maybe adjusting the time frame, maybe adjusting the length of the trailing stop loss, maybe differing in terms of the entry. You must understand the why. And these books, right, they give you a firm foundation to understand the why behind trading systems work, right? This is important. Okay, so go and read books, right? Trading books, right, that clearly, right, have systems and results that are backed with it. The next one, right? Why do 95% of traders fail? Is because they treat the markets like an ATM. I do not know how often I've seen in my Facebook group, hey Rayner, is there a trading strategy that makes me $30 a day? You know, hey Rayner, I'm not greedy. I just want to make $5 a day in the markets. Hey Rayner, I'm even less greedy. I just want to make $2 a day in the market. I just want something consistent. I only want to make 10 pips a day. Oh, I only want to make 5 pips a day. I'm not sure if you've seen, such comments. I see that all the time. And here's the thing. The only way that you can make money consistently every day from the markets is only if a strategy works all the time. So now let me ask you, when does a trading strategy works all the time? A trading strategy works all the time only if market conditions never change. Now let me ask you, have you ever looked at a chart, any markets, any time frame, where the market condition is always the same? It's always in an uptrend. It's always in a downtrend. It's always in a range. Have you seen such market condition? Have you seen a market with this type of a phenomenon where the market structure, where the price action, where the market conditions is always the same? No. I've never seen such a market. Market conditions always change. It always moves from an uptrend to range to a downtrend, and it goes up a day and down and whatever. Market conditions are always changing. And if market conditions are always changing, what does it mean for your trading strategy? It means that no trading strategy works all the time. Because you have to understand that a trading strategy is only meant to exploit a certain pattern, a certain phenomenon in the markets. And when that phenomenon is gone, when the market structure changed, that strategy is no longer going to work. And if a trading strategy doesn't work all the time, then how can you expect to make consistent profits, consistent pips every single day or every single week? It doesn't make sense. Okay, so don't treat the market like your ATM. It doesn't exist. It's not like, you go to you open your MT4 trading terminal, buy, sell, pump $50 bang in my pockets. No, you're dreaming. It doesn't exist. Don't treat the markets like your ATM. If you want a fixed paying job, if you want a regular paycheck, get a job, not trading. Okay? Hard truth, but this is the truth. So one way to go about it is that for our full-time traders, what they do is that they understand this phenomenon. They know they're not going to make money every single day or every single week. So what they do is they keep a chunk of their profits when times are good, right? Maybe a certain market condition is favorable to their strategy, right? They don't just blow their profits on Lamborghinis, Ferraris, or some hot chicks. No, they keep the bulk of their profits because they know when the drawdown comes, when the tough times come, those profits is what is going to keep them afloat. Okay? Don't treat the markets like your ATM. Next one. Now this is important, right? The reason why many traders fail is because they're not willing to do the work, right? You believe what others say without verifying. Like for example, hey Rayner, can you tell me which is the best moving average out there? Hey Rayner, which trading strategy has a minimum of a 1 to 2 risk reward ratio? Hey Rayner, can you let me know if this time frame combination is good? Hey Rayner, hey Rayner, hey Rayner. Oh, you have no idea, really, right? The amount of questions I get, they are not wrong, but it tells me that the traders are just simply not willing to do the work. They just want to be spoon-fed. For example, what I mean by, you believe others without verifying. You've often heard that, hey, in order to be a profitable trader, you need to have a minimum of a 1-to-1 risk-reward ratio. Or you need a minimum of a 50% win rate. Really? So let's put it to the test. So this over here, right, I just pull this up over here. There's a couple of trading systems I've developed. This is a systematic trend following, and you can see that over here, the win rate is about 46.83%. It's less than 50%. It loses more than half the time. And you can see that in the long run, it makes about 18.54%, right, over the last 19 years over here. You can see that the year-on-year breakdown, the system has returned pretty decent over the last 19 years with less than 50% win rate, right? You can see that the equity curve sloping up higher over time. So clearly, you don't need a 50% win rate to be a profitable trader. And the reason this is possible is because if you look at this profit factor, this basically means risk-reward ratio. You see that it's because for every dollar you risk, right, you get back $1.63. From a risk-reward standpoint, right, this is favorable, right? For every dollar you risk, you get back $1.63 on average. So that's why, even though you have less than a 50% win rate, you can still make money in the long run. Another one, Rayner, you need a minimum of a 1-to-1 risk-reward ratio. Really? Okay. This is a mean reversion trading system. You can see below here that the payoff ratio, okay, it's less than 1. It's 0.69 actually. What this means is that for every dollar you risk, you only get back 69 cents. But this particular system, okay, it makes an average of about 24%, right, over the last 19 years. And the reason this is possible is because of the win rate. The win rate here is about 65% win rate. So can you see that you can't just take whatever others tell you at face value? You got to verify. You cannot just believe, right, something that someone said. You can't even believe what I said. What I'm sharing with you is based on my experience, based on the data I have. I could be wrong. My data could be flawed. Okay? You always have to take whatever information that comes your way and do the work, verify it, and see whether it's true or not. Take nothing at face value because I just proved it to you, right? You don't need a minimum of a 1-to-1 risk-reward ratio. Risk-reward ratio to be a profitable trader. You don't need a minimum of a 50% win rate to be a profitable trader. So these are just a couple of, common saying, right, that is clearly not true. And there are pretty much more down there that I've not yet, talk about it. So the lesson is you really got to verify and do the work. Take nothing at face value. Don't trust anyone. Do the work and verify the information yourself. How do you do the work, right? Number one, validate any trading strategy or concepts that you come across. It can be via backtesting or forward testing. Some of you might be thinking, Rayner, that's really a lot of work. That's why I just said do the work. You got to be willing to do the work. You don't expect to have a profitable business without doing the work. You don't expect to set up a successful, for example, F&B, a cafe, right, without doing the work. You need to, get the right contractors. You need to find the right location, get the supply of raw ingredients, hire the waiter, waitress, run the operations. You need to do the work. And it's the same for trading. It's a business. There is work involved. And if you're not willing to do the work, then you got to be willing to part your money because that's what's going to happen. Okay, so how do you do the work? Validate your trading strategy, right? And journal down your trades. This is where you have data that you can work with, right? And to find out whether something works or not. Okay, so with that said, a quick recap, right? The reason why most traders fail is number one, they get fooled by randomness. They do not know what is the law of large number and how it works. Number two, they don't have an edge in the markets, right? You must have an edge. And I share with you that a few ways to get an edge is, you can read books, right, from traders who actually share with you their systems with backtested results. Number three, don't treat the markets like an ATM, right? The market is not your ATM machine. Okay, you're dealing with probabilities over here. There are periods of wins, period of loss. Embrace them. And number four, right, you have to be willing to do the work, right? There is no free lunch in this world. Nobody's going to spoon feed you, because if you want to be spoon fed, then really trading is not for you, because you will most certainly fail. Okay? So with that said, right, if you are right now, if you want to learn more about my own trading methodologies, techniques, and stuff like that, okay, I am not going to spoon feed you, but I'm going to guide you, right? I have a couple of trading guides over here that you can learn more. One is the Ultimate Trend Following Guide and the Ultimate Guide to Price Action Trading. This one talks about riding trends in the market, right? So you can profit in up and down markets. And this one talks about Ultimate Guide to Price Action Trading. Okay, how to better time your entries and exits. So if you want them, right, just go down to my website, tradingwithrayner.com, click this orange button, and I'll send it to your email address for free. Okay, so with that said, I have come towards the end of this video. If you've enjoyed it, hit that thumbs up button and subscribe to my YouTube channel. The link is below. And I wish you good luck, good trading. I'll talk to you soon.